Today, we're going to talk about something that might sound kind of complicated, but trust me, it's actually one of the simplest and most powerful tools you can have for your financial future. We're talking about stock saving. You ever ask yourself this? Where on earth does my money go? You feel like you're doing all the right things, you're putting money aside, but it just seems to sit there. Or even worse, some unexpected emergency pops up and poof, it's gone. It's so frustrating, right? It feels like you're on a financial treadmill, just running in place. Well, there's a name for that feeling, and it's called inflation. It really is the silent enemy of your savings. I mean, just think about it. 10 years ago, what could 20 bucks get you at the grocery store? A whole basket, probably. And today, maybe just a few items. That right there is your money's buying power just slowly fading away. So here's the bottom line, and this is really important. If your money is just parked in a standard savings account, it's not standing still. It's actually losing ground. It's effectively going backward. So while saving is crucial, just traditional saving on its own, it's not enough to really move you forward. But what if there was another way, a calmer, long-term approach to make sure your money is actually working for you, not against you? And this is exactly where the idea of stock saving comes in. Now I know as soon as you hear the word stocks, your mind probably jumps to those crazy scenes in movies, right? Stressed out traders yelling at screens. Let's just completely erase that image. Stock saving is the total opposite of that. It's not about high stress, risky, complicated decisions. No, it is calm, it's long-term, and it's all based on a simple, repeatable habit. So what is it really? Honestly, just think of it like putting money in the bank. The only difference is that instead of just saving cash, you're saving up tiny little pieces of ownership in the real companies. It's a huge shift in your mindset, from just storing your money to actively growing it. So how does this whole thing work? Well, the good news is you don't need to be a financial wizard. It really all boils down to three simple principles. This is all about habit, not bravery. First, you buy a little at a time. Second, you do it consistently, like clockwork, maybe every week, maybe every month. And third, and this is the big one, you don't freak out about the daily market news. Success here comes from discipline and patience, not from trying to outsmart everybody. Okay, let's talk about the biggest question most people have, the one that stops them before they even get started. Don't I need like thousands of dollars to get into stocks? The answer is probably going to surprise you. You can start with just one, a single share. The amount you start with is way less important than the simple act of just starting. The barrier to getting in the game is lower than it's ever been. Which brings us to a pretty fascinating question. What do you think is the most expensive thing when it comes to building wealth? It's not the price of a share. It's not fees or anything like that. It's lost time. That is the most valuable and therefore the most expensive resource you have. Every single day you wait is another day your money isn't working for you. The real power in this whole strategy is just giving your savings as much time as possible to grow. But you know, the benefits of doing this go way beyond just the numbers in your account. Building this habit can actually change how you see the world. It's almost a form of self-development. You naturally learn patience and emotional control. You start thinking in terms of years, not days. You start to get a real understanding of how businesses actually work. And as a side effect, you often become way more mindful of your own spending habits. And then there's one of the coolest parts, dividends. It's actually really simple. When a company you own a piece of makes a profit, it might share some of those profits with you, its owner. This is literally money that shows up without you doing any extra work. You can take it as cash or, and this is the real power move, reinvest it to buy more shares and grow even faster. It's money making money. And hey, don't ever think it's too late or too early to start this. This approach is for everybody. It doesn't matter if you're young with decades ahead of you, or you're older and looking to build solid assets. This strategy works. The key factor for success isn't your age. It is, and always will be, your consistency. So let's talk about taking that first step. It is so important to remember this is not a race. It's a long, steady, and really rewarding journey. And let's be crystal clear on the goal here. If you're looking for some get-rich-quick scheme, this is not it. The true purpose of stock saving is something much more stable and meaningful. It's about methodically building for your future. It's about getting ready for the things that really matter in life. You know, education funds, buying a home, actually having a comfortable retirement, and maybe most importantly, achieving real financial freedom. Slowly but surely, year after year, the results start to show up. So, what's the big takeaway from all this? The message is simple. First, start small. Don't feel like you need a fortune to begin. Second, start now. Don't let another day of that precious resource, time, slip away from you. And third, and most importantly, stay consistent. That is the engine that is going to drive your growth over the long run. Because in the end, this isn't a sprint. The winner isn't the person who starts the fastest. It's the one who stays the most consistent. The one who turns a simple action into a powerful, lifelong habit. So the only real question is, are you ready to begin?